Alright, well hello again everyone and welcome out. This is Ankit from Maverick Currencies here, and this is a quick video on the US dollar. I mean, we had the FOMC that just raised rates by 75 basis points. So in this video, we'll be taking a look at the dollar post that announcement and see what's in the store for the US dollar going forward. As you can see in the past, back in May and June, we had quite a back and forth after the Fed rate hike. And in this situation, you notice that the dollar was running into the news. We sold on the news and we quickly resumed the trend higher. Same thing happened in June. We actually ran up. We did pull back on the news for a couple of days and then we ran higher. So the question is, what's in store for us? What's next? As you can see in this chart, the dollar did move differently this time. We did not make a run into the news event. We actually pulled back into the news event. So when the news event came out yesterday, the dollar just did not really react as much. I mean, we did see dollar pull back, but you can see as we're looking at this currency basket, remember we are studying this the price action not on the DXY but on the currency basket, looking at the average for all the major currency pairs paired together. Now, if you take a look at DXY, and one of the things that I always point out, DXY, the weighing of DXY is 53 or 57% of that weighing is the euro US dollar. So you're really getting skewed results by what the euro dollar is doing. And you can see euro dollar is actually on the downside, but this is mostly what's the relative weakness that we have seen from the euro. If you take a look at euro currency basket, I mean, euro is down 0.5%. It's actually down the weakest compared to even the Aussie. I mean, the euro is actually underperforming across the board. The trend is moving lower. So the results in DXY is skewed by the euro USD. So let's just go back to the currency basket of the US dollar and then see what the currency is doing overall. As you can see, the overall results hasn't been as big. I mean, the dollar basket is down 0.2%, which means that the dollar really hasn't had a big move compared to the last two meetings. But that also means that there's a further potential for a dollar to break down further. As you look at this chart, we are just hanging off of this 50-day moving average. Last time we checked that level, that was back in June, and we did rise nicely off of that. But at this time, I think it looks a lot different with the dollar reaction and the price action. I think the dollar could be in for a bit more stagnation to a further downside. I mean, dollar has done well. But at this point, dollar doesn't seem to be catching that trend. Now, the biggest move that we have seen post that the FOMC is in the yen. And I know this had kind of puzzled a lot of traders why yen had its biggest move. I mean, you can see the yen did rise 1.5%. And by comparing that percentage change move, I mean, this was on a daily chart. Let's actually see how big that move was today. And this is the biggest move in the yen going back to May 12th. As you can see at the May 12th, that was actually coming off of a run in the yen. And then that did proceed by a pullback. This time, this move is coming to get us out of that downtrend. So, I mean, we are pretty much similar levels where we were last time on this downward trend line. And I think at this point, the yen actually is catching a bit of a trend, so which means that the dollar is no longer that currency of choice in this market environment. We are seeing negative GDP, which was a bit of a setback for some of the dollar bulls. And I think at this point, if it gives up that 50-day moving average, now we are looking at further downside in the US dollar. So now let's take a look at currency pairs that are actually looking decent for either a breakout or some of them has already broken out. Now, Aussie dollar, let's just start with that. So Aussie dollar, you can see that this thing has ran up to the resistance right before this news event. And after that, actually, this has still not been able to clear out the resistance. So this is maybe taking a short-term pause. But right now, as you can see, this is in a bit of a rally mode. And we can actually get further higher once it breaks at 70 level. We got pretty close. We actually got above it last night. And then here we are pulled back again. Now, taking a look at other currency pairs like dollar CAD, I mean, you can see the dollar CAD is not really doing much. This is actually still falling. Now, the biggest move really has been in this dollar yen pair. As you can see, the dollar yen pair has pulled down very aggressively. I was actually watching this little uptrend that we were been in. I mean, at this point, a lot of these yen crosses looks like it wanted to break out. And here we are, got a nice little pullback. And then we actually breaking that upward trend line at the same time. So once we get below the 50, I think there's further downside. I mean, this is the biggest move in the dollar yen going back to, again, same time, May. And we got a big move post the FOMC in June. So one of the things we're noticing is that, yeah, like last time it did pull back very aggressively, but it did rally right after that. But that was also because dollar was doing well. If the dollar doesn't recover this time, now this creates an opportunity for some of the pairs to actually back off, for example, dollar yen. Now we can also compare dollar to other currency pairs. Let's see how pound dollar is doing. You can see the pound is improving against the dollar. So most of the currencies are actually improving against the dollar, or has improved going into the event. Now, the only currency pair that we'll find that is actually in trouble is the euro. And if you take a look at the euro performance today, I mean, euro is more weaker than the dollar. So something to keep an eye on. So if the euro stays pretty weak, I think the euro likely to take charge in that weakness compared to the dollar. But if the euro can turn around, then dollar will ultimately be left alone to catch a bit to the downside. But right now, if you take a look at the percentage moves, even though dollar yen pull back, I mean, take a look at the move in the euro yen. I mean, euro yen has completely broken below that the previous support over here, and we actually have the biggest move in the yen on hand going back to May. So this movement today looks very similar to the movement that we had back here when we got that move. So I will have to kind of wait and see, but at this point in time, I mean, last time it was still hanging above the moving average, and today it's actually or the trend line, and this time actually it is moved below that trend line. So something to kind of keep in mind. And right now there's seems to be a further downside in these pairs. So now let's go back to some of the dollar pairs and see where else we can find a good opportunity. Let's actually take a look at Kiwi dollar, see what that's doing. One of the things it is to keep an eye on is that as the dollar pullbacks, then it lifts some of these currencies that are actually being under pressure, like the Kiwi or like even the Aussie. That actually gives a bit of a boost because dollar pulls back and that lifts some of the other growth currencies. So if that's the case, then we can actually see a bit more further upside in the Kiwi. Kiwi has been in this downtrend for the longest time, but you can see that we are making a bit of a trend changing move right here. So if there's a further move to the upside, then we have to get above this decent levels here. So looking at dollar, Kiwi dollar, again, this could be an early precursor of that. I mean, right now we're getting a nice reversal on the Aussie Kiwi pairing as well. So Kiwi seems to be catching a nice little bit onto the upside here, or holding steady as the dollar looks a little bit shaky. Another thing to keep an eye is that all the yields, remember how the bond yields were rising, and that's really helping or forcing the central banks to raise rates. Now that's actually falling dramatically. I mean, if you take a look at the yields, the Japanese yen 10-year yields down 6.5%. Take a look at the yields across the board. I mean, they all have turned around, which means that the scale of the rate hikes, or the expectation, is likely to recede, pull back a little bit further as well. As you can see, the same thing happening across the board. So this is telling me that we could be coming into a regime change. Remember, for the last 3 months, we have seen a very similar regime in the markets as things are just running up. And they're running up not just on the rate hike, but in the anticipation for further rate hikes. Now, when you take away that further anticipations or further bullishness from those rate hikes, now you have to kind of look at things differently. Maybe it doesn't have what it needs to even pull it up more further. I mean, the Kiwi, the CAD is a great example, and maybe this is another currency to keep an eye on as far as the regime change goes. So since March, CAD has been on an uptrend, and every rate hike has actually caused further rallies. But now, as you can see, that this time around, we actually are not rising. Post that rate hike from Bank of Canada, which was a full 1%, now the CAD is actually pulling back a little bit. So if there's a change there, we can also see some changes in currency pairs like Kiwi CAD. As you can see, this thing has been in a downtrend, and it's actually trying to break that uptrend. So the big question really lies is what happened with the dollar, and what's the implication of that dollar move onto the other currencies. And right now we can see that the dollar is weakening, but it's not notable move compared to what we saw in euro and what we saw in some of the other currencies, like even CAD is more weaker on a basket against the dollar. So next 24 to 48 hours, and even going to next week, we have to pay close attention to the dollar and see what's really taking the charge and what's really pulling back. Right now, everything is kind of overshadowed with the yen move, which again could be coming to a regime change as well, as we have been in this downtrend for the longest time, and we're trying to break above that. And if there's this regime change has more follow through, then I think there's a lot of currency pairs that looks decent for further correction. I mean, dollar CAD, we looked at it. I mean, this is still won't be as big of a mover, I think, because dollar and CAD has kind of moved in tandem in the past few months. But if you take a look at other currency pairs like Aussie dollar or Kiwi dollar, I mean, as we can even go take a look at currency pairs like dollar Swiss franc, I think this is where there's a bigger opportunity. I mean, look at dollar Swiss franc is actually broken above these moving averages. Now they're actually turning lower, and you can see that if it breaks that 95 level, then there's a little bit more further downside risk in dollar Swiss franc as well. And the last puzzling, I think, if you're trying to find out the line in the sand here, I think you have to take a look at the euro dollar right now. The euro is still a better favorite short for me. I think once the euro turns around, then we have to take a look at dollar more being in the short. So we'd like dollar further to the downside, but we actually like euro more on the further downside. Look at that. It's already broken the support on the currency basket, which means that euro is weakening across the board. Even day like today, we actually have nice movements. Even if we take a look at currency pairs like euro Swiss franc, euro Swiss franc is actually moving lower and lower. So that means that euro is the biggest loser in terms of the performance, and I think would probably continue until there's a regime change. And for that, the euro dollar, we have to take a look at it from the parity perspective. If this can get above this previous high of 102.68, now that will lead us back to the dollar. If the euro dollar continues to go lower and touch the parity level, I think we probably still want to continue with the euro until there's a change in that direction. Thanks for watching, and stay tuned for our next video. Cheers.